Every morning, millions of people wake up and check their phone for one thing before anything else. Bank balance, direct deposit, credit card payment. We live in a world where money moves invisibly through wires and networks, where your paycheck appears like magic and your mortgage payment vanishes with a click. But what if tomorrow morning you woke up and none of it worked? What if every bank in America simply shut their doors and turned off their servers? What if the entire financial system that holds our economy together just stopped? Most people think it could never happen. They imagine banks as these fortress-like institutions, too big and too important to ever just disappear. But here's what they don't understand. Banks aren't fortresses. They're houses of cards built on trust, and trust can evaporate faster than you think. In March 2023, Silicon Valley Bank collapsed in a single day. Not over months or weeks. One day. And it wasn't some tiny community bank. It was the 16th largest bank in America, and it died faster than a smartphone battery. If one bank can in van 24 hours, what happens when they all do? The scary truth is that we're about to find out exactly how fragile our entire financial system really is. Because when the banks shut down tomorrow, the first thing that dies isn't your savings account, it's everything else. Let's start with the obvious. You wake up, grab your coffee, and try to buy gas on your way to work. Your credit card gets declined, you try again, declined. You check your banking app, but it won't load. The ATM screen shows nothing but error messages. You think it's a glitch, maybe your bank is having technical difficulties, but then you notice the line forming outside the bank branch. People are confused, angry, holding their phones up, trying to get a signal that isn't coming. The electronic signs that usually display account balances are dark. The doors are locked. A small paper sign reads, "Temporarily closed," and that's when it hits you. This isn't a glitch. Within hours, the realization spreads like wildfire. Social media explodes with posts from people who can't access their money. The hashtag #BanksDown starts trending. News channels interrupt regular programming. But here's the thing about modern banking that makes this scenario so much worse than anything our grandparents faced during the Great Depression. Back then, people kept cash under mattresses and in coffee cans. Today, most of us barely carry $20. Everything is digital. Everything flows through the banks. And when that flow stops, the entire circulatory system of the economy has a heart attack. Your employer tries to run payroll, but the electronic transfers fail. The grocery store can't process credit cards, and their cash registers are programmed to connect to payment networks that no longer exist. The gas station pumps shut down because they can't verify payment. Even if you have cash in your wallet, most businesses discover they can't make change because they haven't ordered in years. The invisible currency's physical infrastructure we all depend on reveals itself by disappearing. But the real chaos isn't happening at the gas station or the grocery store. It's happening in the places you never see. Behind the scenes, in server rooms and trading floors and corporate boardrooms, a financial apocalypse is unfolding. Companies that seemed rock solid yesterday are discovering they can't meet payroll, not because they don't have money, but because they can't access it. Their cash is trapped in accounts they can't reach, managed by banks that no longer exist. Think about your own life for a moment. When was the last time you paid rent with cash? When did you last mail a physical check for your car payment? The answer is probably never. Your mortgage, your utilities, your insurance, your subscriptions, everything automatically pulls from accounts you can't access. Your direct deposit salary goes into a vault that's suddenly sealed shut. Within 48 hours, you're not just broke, you're financially invisible. The system doesn't know you exist because the system itself doesn't exist. And this is where the real nightmare begins. Because banks don't just hold your money, they create money. Every time you get a loan, every time a business gets a line of credit, every time someone finances a car or a house, the bank essentially creates new money that didn't exist before. It's a process called fractional reserve banking, and it means that the total amount of money in all is the accounts actually more than the physical currency that exists. Most of our economy runs on this created money, this digital promise that banks will honor their obligations. When the banks shut down, trillions of dollars in created money simply evaporate. Not just your checking account, but the credit that keeps businesses operating, the loans that keep people in their homes, the complex financial instruments that keep entire industries functioning. It's not just that you can't access your money. It's that most of the money you thought existed never actually existed in the first place. The Federal Deposit Insurance Corporation exists specifically to prevent this kind of panic. They insure deposits up to $250,000 per account, and they have protocols for handling bank failures. But those protocols assume one bank fails at a time, maybe a handful in a crisis. They have teams that can swoop in over a weekend and transfer deposits to healthy institutions, making sure customers barely notice the change. But what happens when there are no healthy institutions left? What happens when every bank fails simultaneously? The FDIC has access to a $100 billion credit line from the Treasury, expandable to $500 billion in extreme circumstances. That sounds like a lot of money until you realize that Americans have over $17 trillion in bank deposits. Even if the government wanted to pay everyone back, they'd run out of money before covering 5% of deposits. And that's assuming they could physically print and distribute enough currency to replace the digital money that vanished, which would take years. The cascading failures spread faster than anyone can respond. Businesses can't pay suppliers, so supply chains break down. Employees don't get paychecks, so they can't buy anything. Stores run out of inventory because they can't pay for shipments. The economy doesn't slowly decline, it stops. Like a car hitting a concrete wall at full speed, the impact is instant and devastating. International markets watch in horror as the American financial system implodes in real time. Within hours of the first bank closures, stock exchanges around the world begin their own death spiral. The Dow Jones doesn't just fall. It crashes through every circuit breaker designed to prevent exactly this kind of panic. European banks, heavily interconnected with American institutions, start freezing their own operations as counterparty risk becomes impossible to calculate. Japanese markets open to chaos as algorithmic trading systems, programmed to respond to American market signals that no longer exist, begin executing trades based on data from a financial system that has essentially vanished. The ripple effects move at the speed of light through fiber optic cables connecting financial global centers. Letters of credit that international facilitateless pieces trade become worth of digital paper. Container ships loaded with goods sit motionless in ports because importers can't access funds to pay customs duties. Exporters cancel shipments because they can't verify payment from overseas buyers. The intricate web of global commerce, built over decades of increasing financial integration, unravels in a matter of days. But here's where it gets truly terrifying. Modern society runs on just-in-time delivery systems that assume money will flow smoothly and predictably. Hospitals operate with minimal supplies, expecting regular deliveries of medicines and equipment paid for through electronic transfers that no longer function. Grocery stores stock only 3 days' worth of food, relying on constant resupply from distributors who suddenly can't process payments. Gas stations maintain minimal fuel reserves, counting on daily deliveries from suppliers who can't finance their operations. The breakdown happens faster than anyone imagined possible. Truckers can't fuel their vehicles because fleet cards don't work, and individual drivers can't access cash for diesel. Even if they could, truck stops discover their payment systems are down, and their suppliers can't deliver fuel anyway. The transportation network that moves everything from food to medical supplies begins shutting down, not because trucks break roads or close, but because the financial lubricant that keeps commerce moving has completely dried up. Emergency services face their own crisis. Police patrol departments can't fuel cars. Fire departments can't pay for equipment maintenance. Ambulances can't purchase medical supplies. These organizations don't fail because their buildings collapse or their personnel quit. They fail because they can't execute the thousands of small financial transactions that keep them operational. Even government agencies, theoretically backed by the full faith and credit of the United States, discover that faith and credit mean nothing when the mechanisms for transferring that credit have disappeared. The psychological impact proves just as devastating as the practical consequences. Panic spreads through social media faster than any virus, amplified by the echo chambers of people sharing their own financial horror stories. Videos of empty store shelves and long lines at the few businesses still accepting cash create a feedback loop of fear. People who might have remained calm start hoarding whatever they can buy, creating artificial shortages that become real shortages overnight. Communities that seemed stable and prosperous reveal their underlying fragility. Suburban neighborhoods where everyone assumed their neighbors were financially secure discover that most families live paycheck to paycheck with almost no cash reserves. The social contract that holds these communities together, built on the assumption that everyone can meet their obligations, crumbles when those obligations become impossible to fulfill. Homeowners can't pay mortgages, tenants can't pay rent, and the legal system struggles to process the tsunami of defaults and evictions. Local governments face their own impossible choices. Property taxes, sales taxes, and business licenses generate revenue through electronic transfers that no longer function. Even if they could collect taxes in cash, most municipalities have outsourced their financial operations to banks that no longer exist. City employees don't get paid, municipal bonds go into default, and essential services begin shutting down. The infrastructure that citizens take for granted, from water treatment to waste collection, operates on budgets that assume steady cash flow from reliable financial institutions. Small businesses, the backbone of local economies, face extinction within days. The corner restaurant that seemed profitable last week discovers it can't pay for food deliveries, can't process customer payments, and can't access the cash it needs to pay employees. The family-owned hardware store that survived every previous economic downturn finds itself trapped between suppliers demanding payment it can't make and customers offering money it can't accept. These businesses don't fail because they lack customers or provide poor service. They fail because the financial plumbing that connects their daily operations to the broader economy has been severed. Meanwhile, in the shadows of this collapse, a different kind of economy begins to emerge. People start remembering skills their grandparents knew, but they had forgotten. Barter systems spring up organically as neighbours trade services for goods. The mechanic fixes cars in exchange for groceries. The teacher tutors children for home repairs. Communities that seemed disconnected rediscover the value of local relationships and direct exchange. But this improvised economy can't replace what's been lost, and it can't do it fast enough to prevent massive suffering. The scale of modern society requires systems that can handle millions of transactions simultaneously. Even the most resourceful communities struggle to organize basic necessities when the tools for coordination have vanished. The complexity that made modern life comfortable also made it incredibly vulnerable to systemic failure. The collapse of banks isn't just about losing your savings. It's about discovering that our entire civilization runs on promises we never questioned until they break. The question isn't whether this could happen. The question is what you'll do when digital money becomes digital dust, and the only currency that matters is what you can hold in your hands. If this opened your eyes to how fragile our system really is, hit subscribe. Tomorrow's crisis is always closer than we think.